So it's a new year and we're now in 2021, and some of you might be considering investing into the stock market. So this is going to be a full guide on how to begin investing in the stock market, what you should do, how much you should put in, how you can invest into these different stocks. And I've also got a friend here which I'm going to take through this so you guys can also see exactly how it is from the beginning right to the end on how to begin investing in the stock market. Let's get into it. The whole purpose of the stock market is to be able to invest into some stocks which will pay you in the long run. So you can either invest into dividend, or you can be someone who wants to invest for growth. And of course, I will show you guys a few growth stocks or a few dividend stocks and how these companies can give you profit in 1 to 2 years or even a short space of time. All right, so this is the beginning process of opening your stock market portfolio, and you do need to fill in the details. I'm sure everyone knows about this right now, but my friend Jide here, by the way, is going to actually begin this process for the first time, and we're going to see what stocks he's interested in or what he's already, decided to invest into. So after the long process of opening the account now, of course, he's going to go into my YouTube channel, go into the description, and he's going to use the link down below to make sure he gets his free stock, which can range from £1 all the way to £100. And hopefully you get the 50 upwards, but whatever stock he gets anyway, that is still free money at the end of the day. So we're back and we now have £100 into the actual portfolio. So let me take you through the whole process. So here we have the home menu, and this is basically where you see your watch list of the different stocks that you want to keep an eye on. So to actually get rid of some stocks here, you just click on this little pencil icon in the corner, delete whatever stocks you don't want to see, probably like Alibaba and all of this stuff. Get rid of it, and you can replace it with other stocks that you like to keep watch of before you invest into them. Then you have top winners, top losers, popular, blah 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 blah. So these are pretty straightforward. Don't fall for the bait. Just because you see top winner and it's gone up by 292% in the past week doesn't mean you now jump on and it's going to continue. Most of the time, whenever those stocks are top winners, it means it's already banked the growth already. So this went up from, this is in a day, this went up from $9 all the way to 14 in one day. Of course, that's a banger, but some people missed it. So traders now, for example, would have probably sensed that coming, bought into it. That's an easy like £30, $30 profit, if that makes sense. Now you have your actual pie in your portfolio. So this menu here is where you see all the stocks you invested into, and you also have the pie function where you create a pie and you have a series of stocks that you do want to consistently invest into. You can actually choose the percentage as well of how much you want to diversify and how much you want to put into this. All of this is basically automatic. It does it for you. That's the whole purpose of the pie. Search. This is where you put in search for whatever stocks you want. You also have the dividend options here. It gives you some stocks. These aren't all the dividend stocks in the platform, but these are some of the good ones. So every single one here I recognize because I've done research on them already. You also have ETFs. You see it as one stock that includes multiple businesses within them, and if you buy one share of that ETF, for example, you would have a lot of those individuals. Does that make sense, right? So that's kind of what it is. And one of the most popular ETFs out there is the S&P 500. So this has the top 500 stocks in the world. When you have a share of that, basically that one share is basically spread around that whole 500. So the point of this is that if technology starts flopping now, your stock is still safe in other areas and other things. That's the whole point of it. So some people would really love to just put 50% of their whole portfolio into ETFs, so that way they're very, very safe. It's probably the safest way to make sure you don't lose money. REITs are also another one, but REITs are mainly for real estate and stuff. And you can probably do some research on this and you can find more on ETFs. But now that's pretty much it. Most of the time you're either going to be on here or you're going to be searching for something. But these other information here is if you just want information in yourself, something to help you. And when you go in history, this is where you're going to find your orders, all the things you bought. Your dividend payouts will appear here. So this is where you're going to see how much you've gained per month or whenever you get paid. And these are your transactions. Pretty straightforward. So the only transaction you've done so far is put in £100. What exactly, or what type of investor do you want to be, is the question.
Options.
What's options? Oh, so you can either be a dividend investor, you can be a growth investor. I mean, that's kind of two ways to pretty much put it. Or you can be someone who can do both as well. You can happily do both, or you can, you know, invest into ETFs and dividends, whatever the case is. But it's mainly split into, cool, do you want to be someone who has a lot of dividends, or do you want to mainly go for the growth, you know, over time?
Dividends.
Lovely stuff. I mean, I prefer dividends myself. He's part of the dividend gang now, basically. And yeah, so if you invest into dividends, there are, you know, certain dividend stock out there that a lot of people, now most dividends investors know about, and you certainly want to go for these straight away. And obviously we're still in 2020, we're late 2020 anyway, pretty much 2021 in a couple of days, so this is a good-ish time to invest in. The market isn't too high at the moment, so that's good. So if you're going to invest into dividends now, do you already know a few dividend stock that you want to look at? Okay, so from the top of my head, boom, the first one I would, actually, you know what, rather than me telling you, we could just go into the whole dividend section so you can see what Trading 212 has for you. So when you take a look at dividends, you have AT&T, BP, IBM. You might know these as well from actual real life. You might have heard of some of these. ExxonMobil is actually a very good one, but in the past couple months they've been doing very, very bad. I mean, they picked up not too long ago, but it's a stock that's struggling at the moment. This little plus sign here is to the watch list thing that I told you at the beginning, where you can, you know, keep an eye on these stocks as well. But now you have £100. Let me just use my phone to basically show you some of the dividend stocks I have. Okay, so I'll begin by saying you should invest into royalty income. I made a video on this not too long ago, so if you guys want to go watch, you know, the top 3 stocks that beginner investors should invest to, then click on the link, you know, at the top right now to, you know, watch that to see what stocks you guys can invest into as a beginner. But royalty income is definitely one I would recommend investing into as a beginner, simply because it's a stock that has been growing for many years now, and it's one that gives a good amount of dividends as well, and they pay monthly dividends, which is motivating to some people, you know, seeing that you're getting paid every single month rather than getting paid quarterly in a year. There we go. So this is royalty income. When you click on match, you can see the whole progression ever since they were basically came onto the market, which is 2013. You can see so this is for growth. If you're looking for growth, then you can clearly see that, cool, they grew for a little bit. There was growth for quite a bit. Then in 2016, things went downhill, but of course they picked back up again. Then, you know, Rona hit again in March, and you can see it's clearly going back up once again. Hence why this is kind of a good time, because it's pretty much going to get back up to this point in due time. We don't know how long, but it probably will pass that once again. And they pay dividends of 4.7%. All these statistics here can get a bit complicated, but the simple way of putting it is dividend yield is basically how much they pay out based on how much dividends they pay per share, basically. You also have the P&E, which basically is something to do with how expensive people think the stock is at this moment in time. So when you take a look at something like Amazon, it's going to be like high. It means the stock is very overvalued, but then again, it doesn't mean it's bad. Amazon's very overvalued, but it's still Amazon. Do you get it? So don't exactly just, you know, jump to conclusion. The market cap is based on the company. 20 billion is obviously a lot of money compared to you and I and how much we have, but you just want to see how they're actually using the amount of money they have. The EPS is I made a video on this again the other day, but the EPS is basically how much money a company has left to spend after the expenses. Some companies have this on negative, but of course that can mean they're actually making use of every single money they have to develop the business. But some companies can actually have, you know, a lot. So most of the time, depending on the market cap, so something like Tesla and Amazon, they have a high market cap, so they're almost guaranteed to have money left over to do whatever they want. So you can see it in that way. New business would usually have a negative EPS because, you know, they just don't really have that much money to work with. And yeah, that's kind of, I guess, the simple basis. Income statements and all of this, that can get all long. You can actually click on it to find out more details and everything. But the simple form or the simple formula to it is you want to see a constant growth from, you know, 2017 as the revenue grew in the past 3 years, or is it going down? You can also see their balance sheets, how much assets do they have to liabilities, and then that's when you can get to do more research to see, cool, what are these liabilities, where's it coming from, blah 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 blah. So of course, if you want to do more research to find out why companies are doing what, then that's where you can start from.
Alright, so obviously when I get home, I'm gonna research this company right now, and then is it a thing of if I don't think that they're, obviously I'll invest in it now, but if I don't think that they're like going to obviously like be the company in, I don't know, 10, 20 years or however long time, do I then pull out?
I mean, you don't have to. I mean, again, you have to figure out if you're someone who wants to invest for the long term, the short term. Dividends most of the time is long term. But if you set like the moment when you feel like, cool, you're not going to invest into this company for a long time, you don't really have a lot of interest in them, then you already have that company set as a risky investment. You can invest into risky investment if you want to, as long as you have the chest to basically firm any losses. But risk, most of the time, risk always gives, you know, a high reward at the same time. So if you're going to invest into a risky business, then of course just keep that in mind.
So like, let's say right now I invest £50
into rotating income alone, yeah.
And then let's say they go bankrupt, or they just like,
it just crashes for some reason.
Crashes. It's like the most that I can lose out of that is that £50 that I've invested.
Yeah, just see it that way. Like, you're not just gonna lose £1,000. So that's what I'm saying. Whatever money you invest in, make sure you confirm losing that. That's how I always see it. Whatever money ever goes into any form of investment in this world, always make sure it's money that you don't mind losing, because don't put your life savings onto something, then you lose the whole thing, then life gets slow. All right, cool. So we're just gonna, get into a few stocks. Then the rest of them, you can put the rest of the money into whatever stocks that suits you. But for example, rotating income now. If you wanna buy, it's currently 5:27, so the market is still open. In the UK, the market opens from 9 a.m. to 4. In the US, it's from 2:30 to 9 or something along that line.
9 till 4.
Okay, you can even see it here.
You said the market is open.
No. In the UK, as in UK stocks and American stocks. Yeah, that's what I meant. Not like in the UK. Yeah, so American stocks open from 2:30 to 6 p.m. is what I meant. Yeah, but so it's closing in 31 minutes. But when it closes, it doesn't mean you can't buy. You can buy it. It just means the money and stuff will go through the next day whenever it opens. Yeah. So right now, you have £100 to work with. Real estate income is a very good stock. I would recommend it myself, but again, it's up to you. There's fractional shares on this app, which is why it's very, very good. You can choose to either buy based on share straight away, which is $60 for one share, but in pounds it's going to be £44, which is better to hear, I guess. Or you can invest based on value, as in how much you want to put in. So you can choose to put in, I don't know, £10, £5, but the minimum you can put in is £1. Just always keep that in mind. So it's going to be your first investment. How much you'd like to invest into it?
I'm gonna put share.
By 60, 44, straight up. Are you sure?
Yeah.
Because I would recommend always diversifying, but of course if you know you're gonna put in more anyway, I guess that's fine. For me, I started low and then eventually built up, but of course you can put 44 straight into it and just know, cool, boom, done.
Yeah.
So you're gonna buy a share straight away. So buying a share straight away, boom, you just put one share, £44. You reveal the order, it tells you, it looks like a receipt, and you just send the order. And it's pending. Boom! So that is the first share you bought, and it went down by TP just not too long ago. But
in this company.
So now you have a share of a share. Yeah, you have one share in this company. Of course, you have £60 in like 20 billion. I mean, it's basically insignificant. But you have one share. Just know, boom, you have a share of this company. So when you actually find out how much they pay per share, you're gonna get that amount. It's probably gonna be something like $2 per share or something along that line. So you're bound to get $2 in the whole year, I think. Yeah, in the whole year. But of course that's gonna split into the months.
Dividends?
Yeah, so I mean, as in two finger dividends per in the whole year. Is it in the whole year? I mean, we'll see. I don't think it's in the whole year, but I know that's what you get per share every time they pay you anyway. So the whole point is to invest in dividend stocks, slowly grow your portfolio, and literally what's gonna end up happening is every single day, dividends paid, dividend payout from different companies. Or in a month, so in that way you'll be able to see your whole monthly payout. Boom, that's how you know. But one thing to always remember as well, now that you just bought a stock, it doesn't mean you're gonna get paid the next working day or whatever. There's something known as ex-div date. So this means the point at which you bought the stock, then ex-div date is almost like a confirmation that you've held the stock up to that point. After the ex-div date, you then get paid on the next payout after that, basically. So you can't just buy a stock. So what people usually do to finesse the system is basically, not finesse, but you buy it, let's say one day before the ex-date, you get into it, boom, and you're straight into it, you get. So that's what people do. I mean, I've been paid by real estate income 2 days ago, so I think you just miss the payout date. But anyway, the next div date might be probably next month or something. But you just want to hold on to the stock until then. By the time you get your first,
when they do pay, does it go straight into your account, or do they
it just goes onto your
into your
trading tool? It just chills there.
Oh, so
then it just adds to this amount. Then you can then reinvest it. I would recommend reinvesting your dividends, so that way compound interest kicks in. You basically make it free money, put that free money into more money, then more money makes you more money. Eventually you can then start removing based on your expenses per year and stuff, but that's a whole different video anyway. So now that you put 44 into it, you can see already it's up at 4%. No, it's up by 4p. You know, I mean, it's green. I mean, green always looks nice, so that's something to motivate you. And you just started officially on the 24th. Yeah, so 24th, I guess. That's a good start. So now what you want to do is do more research and a couple more things. I guess diversify your portfolio a little bit. You can also invest into ETFs to be safe. But what I recommend, what I started doing first, at least I put £1 into a bunch of stocks. Yeah. Know that cool. I have an eye on these stocks. Eventually, do more research on them. This one is good. Ooh, put more. This one is good. You put more. This one is good. You put more. Then you end up having 40 stocks. Boom,
how much there. Roughly? I was thinking. Actually, I looked at how much is a share in Tesla.
So a share in Tesla right now,
500 or something.
It went up. It's the most insane growth I've seen in a very, very long time. So when you look at Tesla here? No. So looking at Tesla is 662 now.
Oh, per share.
Yeah. So the funny thing about Tesla is Tesla was 1k before it did the split share. So it split the share by 4. So what then happened was each share ended up being, I think it was like 200, 400. So literally a few weeks later, again, it just went back up like nothing changed. So, but the whole split thing doesn't really matter now anyway. It doesn't really change anything. But right now, Tesla's gone all the way back up to 622. You can see this crazy growth literally went up. Like that's how insane it was. Literally went up straight to 662. You're probably not gonna buy a whole share of Tesla. I mean, it's not the smartest thing unless you really know in your heart that this is gonna boom tomorrow. I recommend putting that money into other stocks instead. Maybe not tomorrow, but
it's a long-term thing, no? If you buy a share.
Yeah, but think about it this way, it's a long-term thing, but would you rather not put that 600 into multiple stocks right now and gain the dividends before that boom comes up? Do you get it? Like, I mean, it all depends on how you see it. Yeah, so it depends on how you're feeling. If you have money to work with, you can put 1k into Tesla right now and just firm it and just let it sit there, of course. It all depends on how much you have to work with. But that's Tesla. You can see the information has grown 3,000% and since it started. And yeah, so just do research on stocks, figure out, do I like it, watch videos on the stocks. There's many content creators out there on YouTube that make best stocks to buy now. Take a look at them, and yeah, just of course always do research by yourself though to see what you can firm. Some people can risk losing £1,000. You might not be able to afford losing £1,000. It all depends. Alright guys, so that's a wrap. Thank you guys for watching the video. If you do have any questions, or if you do want to leave any comments, then of course it's down below. Be sure to like the video if you do enjoy the content. Look out for a new video every single Sunday. And this is Jide here. His Insta and stuff will be down in the comments below if you do want to go check him out for whatsoever reason. He's going to continue investing, and I'll recommend you guys also get into investing as soon as you can. It's a fresh year, set yourself some goals. But that aside, take care guys.